Wishing you all a very happy Raksha Bandhan.
Good morning, sir. Happy Raksha Bandhan.
How do you spell your name? How do you pronounce your name, beta?
Sir, Yogender Reddy, sir.
Yogender
Yogender Reddy.
Reddy. Then what is written at the start of your name? Double A L
Ality,
T.
sir, my surname.
Acha, Aleti. Okay,
Yeah.
great. You're from which place, Yogender?
Sir, Hyderabad.
Hyderabad. Oh, great. So yes, very good morning, Yogender, Radha. Yes, Radha, I'm very well now. Much well. Okay. Now today I have an important topic, and I'll request that we have a discussion on this topic rather than it being one-sided. So when you see this term, now since you all are at finals, you all already know this term. What you understand by the term time of supply? See, in GST, everything is connected to supply because supply being your taxable event. So we have time of supply, we have place of supply, we have value of supply, we have nature of supply. So obviously everything has to be connected with supply. Now my question to you is, when you read this word time, what does this mean to you? What does the law says? That is fine, that I'll explain. What you understand by this? Yes, students.
Generally, supply means when that event is specifically happening. That is what is event of supply, what we understood. But then when you are talking about time of supply, it
Hmm.
indicates that when actual GST liability is getting hold of it, that specific span.
Okay. Okay. So you are saying the liability is getting hold of it means, should I say the liability is getting triggered, right?
Correct.
Okay. ठीक है. Yes, Yoginder. Yes, Yoginder.
Sir, time of supply, I think the time of supply is when we show invoice or delivery of the goods happen in some conditions. So it is a time where the implication of GST will appears, and also there will be a delivery of goods and receipt of consideration.
Okay.
Yeah.
See, you all are correct. But what I'm trying to discuss or understand from you is what exactly is the. See, let me then not ask what is time of supply because that is giving you an impression that I'm asking the provision. I don't want the provision. What is the importance of time of supply? Let me put it like this. What is the relevance? What is the importance of time of supply? Yes.
So by the based on the time of supply only we can charge GST, sir, or we can file GST returns.
Okay. So based on time of supply, you are saying our GST will be filed. ठीक है. ठीक है. Yes, Radha.
Sir, because it's very important to determine when the tax liability needs to be computed because it may differ on the specific period of time. So that's why it's important that we determine the specific time on which the GST should be applied. That's what I'm able to understand.
Okay. Excellent. See, what you all said and what you all have understood is perfect. Now, please understand what is the relevance of this concept of time of supply. See, supply, now let us understand it in a different perspective. Let me call supply as any commercial transaction in very simplified language, correct? In fact, in our very first class, which was on supply only, I had given you the word supply means sub pay apply. And then what is that sub जिस supply will be applicable is the commercial transaction. It means what is taxed under GST is the transaction which is having the essence of commerciality. Now comes the most important challenge. The challenge is a transaction may have a spread with respect to time. What I mean by spread with respect to time, a single transaction may not be concluded at a given point of time. I'm saying maybe. So let me first give you examples where the transaction is concluded at a point of time. So you go to a shop, you want to purchase, let us say today is Raksha Bandhan. So Radha wants to purchase some sweets, some gifts for her brother. So she's going to a mall, west side, and over there she's selecting some very trendy t-shirt and she purchases it. She makes the payment. The mall person gives her that slip or invoice, and the transaction has taken place, has started, has ended at a point of time. The point of time is when you are standing at the cash counter, billing counter, you make payment, the person makes invoice, hands over the goods, completed. So when transaction is such transaction, which is a point of time transaction, time of supply doesn't seems to be very relevant or of much use. But we will have to understand and appreciate that there are scenarios where a single transaction may have a wider spread in terms of timing. Now you'll understand the meaning of what I mean by spread. So let us say another example. Yoginder wants to buy gift for his sister today. Now in this particular case, Yoginder is looking out for buying it from a particular vendor, a shop, or a person who is situated at a far distance from his place. So let us say he connects through that person online or through the website. He places the order. Now let us put timelines on this. So he has placed this order on 14th of August 26. The online website person has segregated that item from his store, packed it, kept it ready, and it is delivered from his place, the shopkeeper's place, on 17th of August. Let us say, since the distance is far off, the time to reach the goods at Yoginder's place is received the parcel on 26th of August. And just for the purpose of example, let us say he is making payment after, for example, he is allowed 10-15 days credit. So he is making payment on 10th of September. Now this is one simple example I'm saying. We have multiplicity of cases. Like in fact, if you take example of our live classes, the live classes, let us say you may have joined somewhere in June, July. Let us say there is some admission process. So when the batch was announced, you decided to take up the batch, you joined the batch. The batch joining was by filling a form. Let us say it happened in June. Then you were asked to make a payment before the start of the batch, let us say 50%, which you made in July. The batch starts in August. The batch runs up to October. In between, you are also required to make one more payment of 25% and last payment in November after the batch is over along with revision. Let us say this is the spread for our present transaction. Now, what I'm trying to tell you from all these examples is, see, we have studied these provisions at Inter, but now at final, what is different? At final, what is different is we have to now not only know the law, which once we have already known at the inter stage, now at final level, what is very crucial according to me is absorb the law, which I always say, you master the law when you start feeling the law. When do you feel the law? You feel the law when you start understanding the background, the backdrop of a provision. Now, every provision need not have a backdrop, but there are many provisions. Place of supply, we discuss in detail. Why place of supply is there? What is the destination concept? Earlier it was origin, then we shifted to destination. In the similar fashion, when you are talking about time of supply, you should get the feel of the provision. Now, what is the feel? The feel is that whenever the transaction is having a spread, and it may spread over number of months, in that case, the main crucial point which the law wants to decide, which the law wants to fix is, as you all pointed out correctly, on which date your liability to pay GST, or rather, I'll just change my word. I should not say pay, because see, again, making payment of GST is another date, which is the due date when you file the return. So technically, the liability to pay GST is the date of filing returns. So here it is the finalization of your levy. What do we mean by finalization of levy? That okay, for this transaction, which is a supply as per chapter 1, it means GST law applies to it. Now, on which date you will say that from the perspective of law, this supply has happened. This supply has taken place. That date on which the law presumes, keep this in mind, this may not be the actual date because there is a spread of supply over a period of time. But I cannot take tax every day. So let us say, for example, like of ours, where every day some supply is being given to you, some part of coaching is happening every day. We cannot start taxing everyday supply. That will be practically very difficult and practically also not convenient for both supplier, recipient, and even for the government. So the law artificially, this is again very important, fixes a date where you presume that the supply is completed, concluded, or in very simple words, supply has taken place. So the supply has happened. So time of supply is that date, which is a presumption date. This is an artificial date, which you have to follow simply to get the compliance happening in time. What compliance? Now, interestingly, whenever the levy is finalized, levy is what? By section 9, which says there should be supply, it should be of goods, etc., etc. Once levy is finalized and you have tested yourself on exemption also, that I am not falling in exemption, It means your transaction becomes a taxable transaction. Now, once it becomes a taxable transaction, what follows is what we call as compliance. In compliance, then what comes? Where you have to prepare invoice. Correct? Then you have to file returns. You have to pay the GST. All these things become part of compliance. Now, what is important is the moment you know that, yes, my transaction is taxable. See, leviable to tax and taxable are two different terms. Levy will cover all transactions which are taxable plus which are exempt. But ultimately, we don't have to pay tax on transactions which are exempt. So maybe for exempt transactions, the compliances may be different. Right now, we are on the transactions on which you have to pay tax. So I'm calling them as taxable transaction, means where you have to pay. Now, for such transactions, you have to determine exactly which date you will pick up out of the whole spread of the transaction, where you will say, okay, this date becomes my basis for filing returns, for making payment, etc. Now, that date, which the law takes as the basis on which the law artificially deems that supply is complete, supply has happened. That is what is the time of supply. Means it may not be actually the date when supply has happened. I repeat my words. Actually, the supply may not have happened on that date. That is why I'm using terms like artificially and deemed. So you have to understand this point, students, because whenever there is a liability to pay tax, the law has to fix a date, which will be the date making you liable to pay the tax, so that in case if you do not pay the tax on that date, then all the actions from the department may start. They may take action against you, they may serve you show cause notice, they may ask you to pay interest, etc. So when a transaction is spread over a period of time, let me take example of our class. So let us say, I'm now giving an assumption, artificial point. This is not the case. That let us say the law would have asked me, ki boss, in case of coaching, you should pay tax when the entire batch is over, everything is over, including the exams of the students, then only you have to pay tax. Now, what will happen if this would have been the case? This is not the case. I will not be paying any tax up to May 2027 for this batch. And since I have received the fees, my coaching is done, since everything is done, in the eyes of an outsider, they will say, Vishal, everything has happened. Why are you not paying tax? What I will say, bhai, I don't have to worry, because my law is not asking me to pay tax till the students' exams are over. Means what? No officer can come and take action against me. Changing this point, let us say, again, this is what I'm saying is not the real case. Let us say the law would have said, Ki Vishal, when your batch is happening is immaterial, when the exam is happening is immaterial. For us, the tax liability starts on the date when the student registers for the batch. Whether you have received the fees, whether you have given the coaching, makes no difference. For us, the liability is triggering the day the student fills your form for this particular batch. In that case, in July, I would be required to discharge the tax. You may not have paid the fees. You may have not, I may not have given you any coaching by that date, but still, if the law would have said the date on which the student fills the form for your batch, for us that is the date, then immediately after the June month is over, if I'm not doing the compliance, then the officer can come to my doors and do all types of recovery action against me. Interestingly, in both these examples, what I'm trying to tell you, though none of these is the reality, the time of supply, what exactly it is, when we proceed with the provisions, you'll understand. But I want to give you a picture of the importance of this concept of time of supply. That time of supply is that artificial date, or it may be multiple dates, which the law is saying ki presume on this date supply has happened and accordingly do the compliance. So the relevance of time of supply is doing all these compliances of filing returns, paying GST, etc. And it is an artificial date. Same like what I had mentioned for place of supply, that physically destination may be different, but the law says presume this is the destination, that is, this is the place of supply, and accordingly you comply with the law. Similarly, when it comes to time of supply, again, time of supply is an artificial date where you presume, or I'll say law presumes, that supply has happened. It is concluded, completed. It means the law is saying go and pay tax as per this date. Do the compliances as per this date. And if you fail to do, the further repercussions will trigger. So students, this is what is the key point in time of supply concept. Have you all understood this? Students,
Yes,
Yes,
sir.
sir.
correct? So when I see time of supply, now there are two sections basically dealing with time of supply. Now we are again in the CGST Act. We completed in the previous class section 11, which was exemption related provision. Now we are dealing with section 12, 13, 14. 12 is what? Time of supply in case of transactions of goods. 13 is what? Time of supply in case of transaction of services. And 14 is what? If between this spread of time there is a change in the rate of tax, then how will you look at it? If between this spread there is a change in rate, how it will be looked at, what rate to apply, that is what is decided by section 14. So supply of goods, supply of services. Now within both, we have multiple provisions. One is time of supply in case of forward charge, in case of reverse charge. Same here also, forward charge, reverse charge. Then time of supply in case of late payment or of interest, where you are making payment late, so you have to pay additional amount. So these are the various provisions which are provided in these sections. Plus we have some more residuary provisions where none of the above provisions apply. Now when we are going to study time of supply, you have to just remember this, that there is a spread of your supply, and out of this spread we have to pick up a date or maybe multiple dates where we will say This is the date when we presume supply has happened. Fine. Now, when I am having a spread of supply, I'm sure now you all understand what I mean by spread. Spread means my entire supply transaction is spread over a period of time, like how you have example in front of your eyes. Now, when I have a spread of transactions and I have to pick up a date or dates, what is the logic? The logic is the law is trying to take those date or dates as your time of supply, which is getting recorded somewhere. I repeat my words. The law is trying to select those date or dates as time of supply, which is getting recorded somewhere. Why? So that tomorrow in future, whenever the department wants to come and check that whether or not you have complied with the law properly, how they will be able to check if these dates are nowhere recorded. Like I'll give you example. We are having our batch going on and this is spread over, let us say, 3 months. There is no possibility of recording how much syllabus is completed daily. Though we have our schedule, we are going as per the schedule, but still there is no proof, there is no recording. Going a step further, even if you are recording that, okay, today I completed these many pages, I completed these many provisions, still how much quantum of supply has happened every day in every lecture, that is very difficult or impossible to record, to identify. Please understand the relevance of this. See, if I have to be technically perfect, if the law has to be designed in the most perfect manner, what the law should have said, forget about all these things. Simply see exactly how much you are making supply every day, and for that much portion, that much value, you are required to pay tax. But this is practically impossible, one, to decide, to find out. Second, even if I am able to evaluate, because I know the total portion and I know out of that how much I have done, even if I am able to find out that portion out of total syllabus, how much I have done and what is the value of that, where is this getting recorded? Where is this getting reported? So that in future, whenever the officer or the department is doing my assessment or my checking or my audit, how will they be able to cross check what we say in auditing? How will they be able to vouch and check whether or not I have done it correctly? So, since practically this is nowhere going to be reported, recorded, hence the lawmakers have selected those dates which will get some recording somewhere, and then basis those dates, they have picked up one date or multiple dates and said that this particular date or dates will be your time of supply. So understand one thing, what I'm trying to explain from all this deliberation is that because there is a spread of your transaction over a period of time, there may be a spread, and in those spread of time, there are some dates which will have recording somewhere. So the law has said, or law has taken those dates which has some recording somewhere, or which has a possibility of recording somewhere, and then out of those dates, the law has said we will select one or more dates as your time of supply. Now, the simplest logic is, since time of supply will lead to creation of liability, which will lead to payment of tax, what the law has smartly done, they have said that out of these multiple dates, we will take the earliest. So the simple answer that you get as your time of supply is, out of those selected dates, which are having some recording somewhere, the law says take the earliest date. So why earliest? As I said, because this will be the date on which you will be required to pay the tax. So the law is saying take the first date out of these. And that is how the entire time of supply logic runs. So now, if I have to explain you the provisions in detail, we started category wise. First is forward charge transactions. Now in this, the law has categorized the forward charge transactions into three categories. First is regular transactions. Second is continuous supply of goods. And third is a special transaction, which in case of goods is goods sent on sale or return basis. Fine. Now, time of supply, as I said earlier, is earliest of. Now, what are the dates which they have selected, and then they have asked you to take earliest of these? So in case of regular transaction, regular means which is neither continuous, which is neither goods sent on approval. So for transactions other than these two special transactions, for all other transactions which I'm calling as regular, the time of supply is earliest of. Now here, I would require your inputs, because anyways, you all have studied this, and this is a very mechanical, or you can say a more repetitive type of topic. So if you remember anything relating to this, what is the time of supply in case of transactions involving supply of goods? Yes, students. Anybody can help me if you remember? Yes, Yoginder or Radha. You remember what is time of supply in case of supply of goods?
Somewhat vaguely, I'm able to remember. Maybe I can give a try, sir.
Yeah, you have to give a try. See, right, wrong is not important. We are not
Okay,
here in exams.
okay, sir. Regular transaction, the date on which actual sale is being made.
So what is
I,
that date? What is that date?
like, are you asking for a technical term, sir?
No. See, you have used a technical term. I am asking for a simpler term. You said the date of sale. Now, how you identified the date of sale? This is what I want to know. In fact, I want to
When
know
the
it.
goods are being sold, no, sir. Like
So, what
when
is the
actual
meaning of goods are being sold?
consideration is being received at that point.
Again, that is different. See, this is what I'm trying to emphasize.
Okay, okay.
Receiving consideration is different. See, I'll give you an example to distinguish or to highlight what is the point. So you are saying the date of sale, but the question is what exactly is the date of sale is in itself a technical issue. How? So let us say you come to a shop, same example, you have gone to a mall and you have selected a piece of shirt or t-shirt for your brother for gifting him. But since it is difficult for you to carry it immediately, what you tell the shopkeeper, boss, this is what I have selected. You do one thing, you keep it aside. I will come and buy it on this particular day or date, and I will make you the payment also at that time. Possibility one. So that day, maybe 2 days from today, when you have gone to the shop. Second, the shopkeeper says, no, I cannot keep it aside like this. If you want to buy, you buy it today. Maybe you can come and collect it tomorrow. So you actually pay for it. They make invoice today. Only you go and collect it after 2 days whenever it is comfortable for you. Third possibility is you have told them that I want to buy this shirt. You have selected that shirt and you have asked them, ki, boss, do one thing now, make it a proper packing and deliver it on this particular address of my brother. So in all these cases, what is the date of sale is
Date
very
of
difficult.
invoice when invoice is issued.
Exactly. So now that is one point which you are saying date of invoice, right? Now, interestingly, okay, so let us say one date is date of invoice. Fine. So, but we have to take earliest now. So when we are saying earliest, there have to be multiple dates, right?
So we can also consider date of delivery.
We can also consider date of delivery. Okay, perfect. Anything else? See, think like a lawmaker. I gave you one simple logic. What is the logic? The lawmaker has decided to take earliest of those dates which are identifiable. Identifiable means which will have some recording somewhere, so that in future, whoever is coming to do your audit or checking can again check those dates because those dates are recorded somewhere. So that is what is the logic. So the lawmaker has taken earliest of those dates which has some recording somewhere. So now I am trying to understand what are those dates which is having some recording. So one is the date of invoice because that will have a recording, because once invoice is prepared, it will get recorded. So one is you have the proof of that in the form of your invoice book, where that invoice is having the second copy, third copy. It will be in your systems if you are using systems for preparing invoice. So that is one date. Another date you are saying the date of delivery. And let me tell you, both these dates can be different. Correct? So in one-off transactions where immediately you have purchased goods and taken it, both the dates may be same. But in other transactions, both these dates may be different. Any other date, any other date, students, which you feel has a recording somewhere? Yes? Any other date which has a recording somewhere?
Sir, in continuous supply of goods, we can
No, don't say
also
continuous. We are regular supplier. See, now I'm not
regular.
actually asking the provision. I'm just trying to bring you to that particular provision so that in future you will be able to determine it yourself without learning. So what is the logic which I have given? We want to take those dates which will be recorded somewhere, which will have some proof to be checked later. So one date is date of invoice, one date is date of delivery. Is there any other date which is recorded somewhere which has a proof?
Payment date also will be
Payment date
recorded, right,
also,
sir?
because it is having a recording, it is having recording in your books. If the payment is done through bank, there is a recording in your bank. So there are effectively three dates. One is actual date of invoice. Then I'm writing in the language of the law, but it will be exactly what you all have said. Due date to prepare invoice. And the third is date of payment received. So now I'm sure you all understand the difference between this actual date of invoice and the due date of invoice. So actual date is if I have prepared invoice with today's date. So today's date is appearing on invoice. So today's date becomes the actual date of invoice. Due date is the law under section 31, which is a section dealing with invoice chapter, has given a date by which the law wants that this is the latest date by which you should have prepared the invoice. So again, this is date of invoice, and this is the last date, the due date by which the invoice should have been prepared, which they are saying removal, delivery of goods. Now, please understand and appreciate, you can prepare invoice even before delivery or dispatch, correct? So as I gave example, Radha has gone to the shop. She's saying, I'll collect the goods after 2 days, but the shopkeeper says that is okay. But if you want that this shirt should be kept for you, you have to first make payment and get the invoice. so that you can come and collect after 2 days. So in that particular case, delivery and removal will happen after 2 days, but the invoice has been prepared today itself. So the date of invoice and the due date of invoice are two different things. I hope you all understood this, because many times students are missing in this particular point. They are not understanding the exact difference. So there is a difference between the actual date and the due date. So actual date is date what is printed on the invoice. Due date is the date by which the law wants you to prepare the invoice. And in case of regular transaction, it is the date of removal or delivery of goods. Students, are you getting the point?
Yes, sir.
Yes?
Yes, yes.
Okay. Now see, let me take you through the provisions. So section 12, which deals with time of supply of goods. First subsection is the subsection which is saying what I mentioned here. This exactly is what the first subsection saying. What is first subsection saying? It says that the liability to pay tax shall arise at time of supply, which is determined in terms of the provisions given below in this section. Means what? We are artificially fixing a date to be treated as the time of supply. So time of supply is an artificial date which the law is prescribing that you take the date, this date as the time of supply, so that you will come to know when is your liability to pay. So levy is there once you make a supply and the ingredients of supply in section 9 both are satisfied. So there is a supply. You have done classification. Now you also know whether it is supply of goods or service. You also know whether it is interstate, intrastate. Everything is done. But when exactly the liability to pay on this supply will arise, that is artificially fixed by this provision. Now what it says, this is for forward charge. The time of supply of goods shall be earliest of following. Now I'll say, sir, where it has said it is for forward charge. So let me inform you, students, even in section 9, which is the levy section, nowhere the word forward charge is used. In fact, it is using the other two terms where in subsection 3 and 4 it is referring to reverse charge, and in subsection 5 it is putting the charge on ECO, which is a third party. But nowhere it is using forward charge. Forward charge is a terminology given by us where we are saying where there is no reverse charge or special charge, the remaining things are forward charge. So down the same lines, they have given you further what is the time of supply for reverse charge. So for reverse charge, there is a different timeline. So we are saying for remaining transactions, which we call as forward charge, this is the timeline. What is the timeline? It is saying the time of supply will be earlier of the following dates. First, A point covers the first two dates. What is the first two dates? The actual date of invoice and the due date of invoice. And who is fixing the due date? Section 31, which is the invoice section, because we are talking about due date to prepare invoice. So first is the actual date and the second is the due date. Correct? And then the third date is the date of receiving payment. But just let me inform you, students, if you all recall this, in case of time of supply of goods under forward charge, and it is a regular transaction, not a continuous supply and not a special transaction, today this date is not applicable, means you are not going to take, when deciding the earliest, you are not going to take or consider the date of payment. Why? That you will get to know from the provision. But interestingly, the law is giving you this date also. So in the act, this date is present. So three dates the act is providing: the actual date of invoice, the due date of invoice, and also the third date is the date when you receive payment. However, what is given? Practically in case of goods, the date of receiving payment is no longer a criterion. Why it is no longer a criterion? Because in the first year of GST, there was an amendment whereby, yes, this notification dated 15th of November 2017, it had removed this criterion. One second. It was October, one second. See, though the Act has these 3 dates given, however, there is a notification dated 15th of November 2017, which has, for the time being, asked you not to consider the date of payment. So what does this particular notification says? That a registered person excluding composition supplier and a registered person making supply of specified actionable claim, you have to leave them. Remaining suppliers should pay GST on outward supply of goods at the time of supply as specified in 12(2)(a), that is date of issue of invoice or the last date by which the invoice should have been issued. In other words, taxpayers who are under forward charge are not required to pay the GST considering the date of payment. So what is the point? Even though the Act today also covers all the 3 dates, actual date of invoice, due date of invoice, and the date of receiving payment, but because of this notification, the notification has specifically asked you not to refer to the date of payment. Now, what is the impact of this? The impact of this is that if this date was, let us say, required to be checked, then when will this date have an impact? If, let us say, timeline wise, you are first making the payment, then delivery and invoice, these are happening later, but first payment is happening. If this date would have been relevant, then you would have been required to pay tax even on receiving advance. But in case of supply of goods under forward charge, this date is not relevant, because of which you are not required to pay tax on the date of receiving advance, because this date, by virtue of notification number 66 of 15 November 17, this date has been excluded from the time of supply. So for the time of supply of goods under forward charge, you have to check only the first 2 dates which are given in 12(2)(a), the due date given in 12(2)(b), which is the date of payment. For the timing, it has to be ignored, means you will not consider this date. Is this understood, students?
Yes,
Is
sir.
this point
Yes, sir.
clear? In other words,
Yes, sir.
the impact of this is that if you have received advance, that date will have no bearing. You will wait till the actual delivery of goods happen or till the date you prepare the invoice, and on the basis of these 2 dates only you will decide the time of supply and not the date of receiving advance. Now, just if somebody has some interest of knowing the reason or logic why this notification had come. See, originally the law, what you can see today also, was drafted even considering the payment date as one of the dates, and then you are saying earliest of the 3. So the impact of this is, if I have received advance, so many times what happens, we first make the payment of the amount, then the supplier dispatches the goods, because that is how the terms of your supply are fixed. So I have to first make payment. In fact, in some cases, after making payment, maybe after a week, month, the supplier will dispatch. So that depends upon what are your terms. Now, in this particular case, we are not required to make any payment of tax even if we have received advance, and this rule is only for time of supply of goods, and that too only under forward charge. Why? Because when we transition to GST, the earlier law which was applicable was VAT for sale of goods and services for service tax. In this particular case, what had happened was that prior to GST, when we talk about sale of goods for which VAT was applicable, in VAT, there was no such requirement of making payment when advance was received. But in service tax, if you have received payment for service, you were required to pay service tax. So before GST had come, for people dealing in goods, they were used to that mechanism that even if they have received money in advance, they don't have to pay GST. They can pay only when the goods are actually delivered or the invoice is prepared, but not at the time when they have received the advance. So when this new provision was brought in, GST law had come. So traders, small businesses who are dealing in goods faced a very big challenge because they were not used to this type of mechanism. So to give them this relaxation, this particular notification had come. Now it was expected that after 3-4 years, this notification would be removed, and then they will be also coming at par with service people. However, the notification still continues. So today also, the position in law is that for forward charge transactions of goods, you will not consider the date of payment. Now, the moment I say this date B is now not to be considered, it is not relevant, in that particular case, this proviso also becomes irrelevant, because this proviso has direct bearing on that situation only where payment is received in advance. So if advance payment is not to be considered, this proviso will not be required. So you can comfortably ignore this proviso. Similarly, explanation also will not be required completely, because this explanation is also talking about the point of receiving payment. So again, we will not require this particular explanation as well. So effectively, what is relevant for us is only that in case of forward supply transaction of goods, you have to consider earliest of two dates. First date is the date of invoice, so I'm calling it as actual date, and the date by which invoice should have been prepared, which is decided by section 31, decides this date. Which date? By when the invoice should have been prepared. And section 31, when you read for forward charge of goods, it has given these dates. So that is how you land up with these two dates, date of invoice and the date on which the removal or delivery has happened. So if you see section 31, what is section 31 saying? It is dealing with tax invoice. It decides the date by which invoice should be given. So it says a registered person supplying taxable goods shall, before or at the time of removal of goods for supply to the recipient, where supply involves movement, or delivery of goods or making available thereof to the recipient in any other case, should prepare the invoice. So this is how we are getting the answer that by when the supplier should prepare the invoice, it is the date of removal or the date of delivery of goods. This is in case of forward charge of goods. So by these dates, the supplier is required to issue invoice showing the description, quantity, value, the tax charge, etc., etc. And then further it says the government may, on recommendation of council, specify the category of goods or supplies in respect of which tax invoice shall be issued within such time, manner as may be prescribed. Means for some transactions, the government may prescribe a different date from the date of removal. As on date, this proviso is nowhere used by the government because there is no special date prescribed. So for all transactions for forward supply of goods, the date is the date of removal or the date of delivery. Is this clear? Understood?
Yes,
Yes,
sir.
sir.
Now, coming to the second category. So the second category is continuous supply transactions, and that also of goods. Now, in this particular case, again, the first date is your date of invoice. What is the second date? Due date. Again, you have to check from section 31. What does section 31 says? What will be the due date of invoice in case of continuous supply transaction? So for regular transaction, it was decided by 31/1, which gave you 2 dates. But for continuous supply of goods, it is decided by 31(4). What it says? In case of continuous supply of goods, where successive statement of accounts or successive payments are involved, the invoice shall be issued before or at the time of each such statement is issued, or as the case may be, each such payment is received. Means what? If I have to write it down, it will be date of issue of statement or successive payment. Again, actual payment not applicable, because anyways we are saying clause B is not applicable. So let me write the section numbers. So this is given by section 12(2)B. This is given by section 12(2)A. This is also given by section 12(2)A. So 12(2)A has given 2 dates: actual date of invoice, due date of invoice. For due dates, it is saying let the due date be decided by section 31. This date is decided by section 31(1). This date is decided by section 31(4). So these are the section numbers. This 12(2)B has been completely to be removed or ignored by virtue of this notification. So hence in all columns, we will be putting a cross against this date, because this date is not required to be checked in any of the cases of forward supply of goods. Right? Now, this date, what we just studied, is very theoretical, is very academic. In order to understand this, feel this, you'll have to first understand the meaning, the concept of continuous supply of goods, and how it is different from this or this transaction. So understand, students, what is this concept of continuous supply of goods? I'm sure you all know there is a specific definition given for this. But again, beside the definition, again, definition is what is theoretical or academic. You have to understand the feel of this particular point, what exactly continuous supply means. There is the definition. Yes. Now, Section 2, Clause 32 of the CGST Act has defined what is continuous supply. Now, see, we have a definition, but I always say try to get the feel of the point. What is the feel? Feel is what exactly will be a continuous supply transaction. When we will say this transaction is continuous supply. Get this example. So one transaction, which is a regular transaction, and the same transaction can be continuous supply. I'll try to take that example. So let us say the example is like this. We require daily some or the other grocery item, some or the other food item. So we have a shop nearby to our house, which is, let us say, the grocery shop. Now it may be some type of a mall, or it may be a regular shopkeeper. Now day in, day out, we are going to that particular person We are taking cheese, we are taking bread, we are taking butter, we are taking eggs, we are taking milk, and we are taking the regular grocery items like food grains, cereals, pulses, etc. Now, first possibility is that the transaction is a regular transaction, which is generally the possibility. Now, when this transaction will be a regular transaction, you go to that shop, you tell them what all you things required. He packs the things, he gives you, he prepares invoice, you make payment. This happens every day. Rather, if in a day also you happen to go to that person twice or thrice because something is required, your mommy says, okay, go and get this. Something is required, your mommy goes and gets it. So sometimes even in a day, you go to the same shop twice or thrice. But every time you go, you tell them, this is what I require. The person packs the goods, gives it to you. He makes the calculation either on some rough piece of paper or makes a proper invoice. He gives that particular piece of paper to you or invoice to you, and you make payment. Close. So the transaction is done and completed there itself. Why? Because what you are doing is you are concluding the transaction by preparing the document or invoice through which you determine the exact amount payable. You pay that amount, transaction is closed. This is a regular transaction example. Opposite to this, the same transaction becomes a continuous supply of goods. When? Now, since this shopkeeper is your regular shopkeeper, like how we have a family physician, this person is like your family grocery. So, your mummy has undertaken, or let us say done some verbal understanding with that person, which we call as contract, but in such cases it is not a formal contract, it is a verbal understanding, whereby what your mummy says, कि भाई every day whoever comes from my family, whatever they ask you, you give to them, and we will do the hisab after the end of the month. Now this also happens, one in case of grocery, second in case of milk supplies, third in case of electricity, and fourth, nowadays you are getting gas through pipeline. These are the four practical examples where there is an understanding, there is an agreement. You can call it as a contract. Now it may be written, it may be verbal. Contract Act allows both, considers both as a contract. What is this agreement? What is this contract? That the goods will be given continuously on recurring basis. Like electricity is flowing continuously, gas through the pipeline is flowing continuously, and milk and grocery is coming to you on recurring basis. Please try to understand this transaction, because at inter level we may have taken it very theoretically just for the sake of exams, but now you need to distinguish, because at final level, once you qualify as a chartered accountant, you are not simply going to apply these provisions. You have to first distinguish which supply is regular, which is continuous, because answer for both is very different. So what is the difference in same grocery person? If you or your mummy has done some type of contract or understanding that, boss, you provide us whatever we require throughout the month, and at the end of the month we will do the hisab. This is what we normally call. We will finalize, we will work out, we will calculate what is the total bill. So the hisab is done on a periodic basis. Now this periodicity is decided by us. We may fix it monthly, we may fix it fortnightly, we may fix it quarterly. That is our choice. Generally it is monthly. In case of grocery shop, in case of milk wala, in case of electricity, it is monthly. But at times you may decide to do it weekly, you may decide to do it fortnightly. That is your choice. That is an agreement. That is an understanding between you and the shopkeeper. Yes, even rather correct. Newspaper. Why newspaper did not come to your mind? Did not come to my mind because nowadays, at least we are not taking the physical newspaper. Everything is coming in our WhatsApp or in our social media. Fine, but you're correct. Another example of continuous supplies of newspaper. So every newspaper the person is delivering, he is not giving you an invoice and you are not making payment. There is an understanding that you do this for the whole month, and after the month is closed, we fix up a date. On that date, we do the hisab. Correct? So see the definition. Continuous supply of goods is a supply of goods which is provided or agreed to be provided continuously, like electricity, like gas, or on recurring basis, which is like milk every morning, newspaper every morning, or your grocery whenever required. So either it is continuous or either it is recovering under a contract. So there should be an understanding that you will do it like this, and for which the supplier will issue invoice on a regular or periodic basis, which is like, as I said, monthly, quarterly, fortnightly. And it also includes supply of goods as the government may, subject to condition by notification specify. So this you can ignore because till now there is no such transaction which the government has notified to be assumed to be continuous supply of goods. They have not notified, so we can ignore this. So our definition ends here. So what is the point? The understanding is, the contract is that goods would be supplied regular basis and the invoice would be done on a particular time interval. This is what is the essence of continuous supply of goods, distinguishing it from the regular supply of goods. So same grocery can come under continuous supply and same grocery can come under regular supply. So where there is an understanding between that particular supplier and you, that the supplier will go on supplying goods and the hisab will be done at a particular date. Here hisab is what we have called as issuing invoice. So that will be done on a particular date. So what happens whenever you go to the shop? The shopkeeper notes down it somewhere. And then on a particular date, maybe 15th of that month or next month's 4th, 5th, your mummy visits the shop. The shopkeeper makes the total bill, tells your mummy that, see, this in this month you have done all these purchases, this is your bill, and you make the payment. Correct, students? This is what is continuous supply of goods. Now, when it is continuous supply, what they are saying is the time of supply is earliest of two dates. One is the date of actual invoice, and the second is the date on which the invoice should have been prepared. That is what I'm calling it as due date. And what is this date in case of continuous supply? So 31.4 has said, in case of continuous supply, invoice should have been prepared either before or at the time of what? Of issuing the periodical statement. This is what I'm saying, hisab, or receiving the periodical payment. So either it is the date of doing the hisab or the date on which a periodical payment is to be made. Now, what is the example of periodical payment? So many times, in case of continuous supply of goods, and also later when we'll study continuous supply of service, the understanding between you and supplier is that, like how supplier is regularly delivering you goods, you are also every month depositing 1,000 rupees. Not sorry month, every week. So what supplier is saying, ki, see, let us assume this is happening. Your grocery person is saying, ki, see, I am going to give goods on regular basis whenever asked. But you also do one thing. At the end of every week, on every Saturday of that week, you give me 1,000 rupees. And we will do the hisab after the end of month or maybe after the end of 3 months. I'm okay. But at least you make periodic payment, regular payment. So every week every week Saturday, you give me 1,000 rupees. Now, many times when the hisab is to be done after a longer period of time, like 3 months. So the supplier, why the supplier will wait for 3 months for getting payment? So supplier says, boss, do one thing. I will be regularly supplying goods. You also fix up a periodic date of payment where we'll fix up an amount. Like as I said, 1,000 rupees every week. On Saturday, you deposit that amount, you transfer that amount to me, and then maybe we can sit after 3 months to finalize what is the final net hisab. Either payment is more or the supply is more, we can fix and close that account. That is what is the essence of continuous supply. Now, in case of continuous supply, going by the same logic, what dates you will be finding on record, what dates you can check in future. One, because you have prepared the invoice, you'll get the date of invoice from the invoice book. And since you all had agreed that there will be some hisab done, so you will get the hisab because that is written somewhere. So you'll get the date of hisab. Or if there are any successive payments, periodic payments to be done, you will get the date of payments because the payment would be recorded somewhere. Hence, the lawmaker have said, take this as the dates to determine your time of supply, and earliest of these dates will be your time of supply. Is this clear, students? Yes?
Yes.
Have you
Yes.
understood?
Yes, sir.
So recurrent payment would be lasting for how many months? Is it upon the mutual contractual basis verbally?
What? Please
The
come back.
recurrent payment, right? The periodic payment which has been done.
So see, beta, see, again, I come back to the same example of grocery. Now you visit grocery shop day in, day out, correct? Something is over at home, your mommy says, go and get this. So we go and get bread, we go and get some grocery item, some masalas, whatever, right? This is what is happening. Now,
Yes.
if your mummy has done an understanding with that person, ki bhai, every time I will not send money with them, you just note it down somewhere in your book, and I will come after these many days and will do the hisab. Now, let us assume the date to do the hisab is fixed quarterly. So she says, throughout the quarter, whatever goods we are going to purchase from you, I will do hisab after the quarter. So the shopkeeper agrees, but he says, ki then it will be a huge outstanding. So let us do one thing. Every week on Saturday, you keep on transferring me 1,000. This is what is the successive payment. Now, till the time the contract is going on, the payment will go on. So, like for grocery, we have an ongoing contract year and year, because year and year we are going and buying it from that shop. Now, nowadays the trends have changed. Earlier, I'm talking this of 15, 20 years back, or especially when this online was not so prevalent. Nowadays, we are not taking even the effort of going to the shop. We are directly doing Blinkit. But I'm talking of 10 years back, when this online medium was not available for placing orders and getting goods. So this was a common feature that we used to go to the shop, and that is why our shopkeeper was also fixed. And then in many of those cases, this continuous supply was happening. Correct, beta? So answering your question, successive payments will continue till the date the person is making supply. So he is asking payment because he's making supply regularly. Correct?
Yes.
You got the point?
Yes, sir. So every like Saturday, the 1,000 rupees upon that, the implications would be deriving
So what
for
will
paying.
happen? See, this invoicing is happening after 3 months. But since this payment is happening every week, now what will happen? Because of earliest of these two dates, for 1,000 rupees, you will have to do the GST. Means the supplier for that particular month, because we are paying tax monthly, he has received the payment 4 times. Now let us say in a particular month, there are 5 Saturdays. So I have received the payment 5 times. So for him, 5,000 rupees will be the taxable amount for that particular month. In the months where there are 4 Saturdays, 4,000 rupees will be the taxable amount in that particular month. So when the person is filing returns, he will take 4,000 or 5,000 as the taxable value for that particular month. Though the supply of goods which he has actually done may be more or less during that month. But the point is, nobody knows, neither he knows, neither you know, neither the government will come to know what is the actual supply. Why? because the hisab will be done after 3 months. So that is why the lawmaker says, see, we are not knowing what is the actual supply, but we are knowing what payments are received. So let the amount of payment be deemed to be the taxable value for that month. Correct, na?
Yes, sir, got it.
Now, moving ahead to the third type of transaction, which I am calling as special transaction. Again, as per section 12, what is the time of supply? It is the actual date of invoice or the due date. Now, what is the due date in this particular case? Again, that is to be decided by section 31. And section 31 has again given you a due date for this. Now, what does section 31 says? 31 bracket 7 deals with this special case where the goods are being sent on approval, or we also call it in our accounting language, goods sent for sale or return basis. Correct? Now, in this particular case, what is the due date for preparing the invoice? So it says that notwithstanding anything contained in subsection 1 where goods are being sent or taken on approval for sale or return are removed before the supply takes place. So obviously this is what is happening. The date on which the goods are removed, that is when the person is delivering you the goods, on that date there is no sale taking place. Why not? Because today there is no approval. The sale will be said to be taking place only when the buyer confirms, yes, I'm accepting your goods. They are as per my requirement, as per my specifications. So I am accepting. Until and unless he is accepting, the supply has not taken place. So the goods are removed before the supply has taken place. Now, for this particular transaction, so let me say this much part of this provision is simply saying the transaction is goods sent on sale or approval basis. The invoice shall be issued before or at the time of supply, or 6 months from the date of removal, whichever is earlier. Now, what are the dates given for raising invoice? So section 31(7) says the invoice should be prepared either when 6 months from date of delivery, this date happens, or now they have used the word when the supply happens. I will change that language to date of confirmation given. Now, since the goods are sent on approval basis, so if you want to write instead of confirmation, I'll write approval. So date of approval. So the law says in case of goods sent on sale or return basis, it will be the date on which you receive that approval. Yes, I accept your goods. And to keep a timeline to this, because then people may defer the tax payment by saying that, okay, till date approval is not given. Hence, to keep a timeline on this, they have kept a timeline of 6 months. So from the date when you delivered or dispatched the goods to that person, 6 months from that date is the last date. If by that date you don't receive approval, fine, we'll take this 6 months date as the last date for raising invoice. So in case of goods sent on approval basis, the date for raising invoice is first the date when the supply is concluded, and when it will be said that the supply is concluded when you receive the approval. And to keep a timeline on this so that people do not misuse this, they have kept the timeline as 6 months from the date of delivery or dispatch. Is this clear, students? Is this understood by all?
Yes, sir.
Anybody, any questions on this? Either on the understanding of the provision or the logic behind the provision?
So what I think is 6 months is a quite large amount of time which has been
Yes,
provided.
actually it is very large. See, I'll tell you again the genesis of this. See, this was the timeline which is, or which was there, you can say, in this kind VAT loss. So this 6 months timeline has been taken from VAT loss, correct? So that is
Okay.
why, if you ask me, this is a very large timeline. But see, Radha, still I will agree to this. You know why? Because we are looking at the transactions from our micro level. So what transaction you are looking at? I have placed order something on Amazon. I will receive it. It has a return policy of 7 days, 10 days, 15 days. So that much time is sufficient. But we are forgetting that these transactions or these provisions are designed from the industry perspective. In case of industries, many times the delivery of goods itself may take few months, right? So let us say my business is in Delhi and I have to deliver goods to a person who is somewhere in Kanyakumari, and also the goods are of huge length. So making the goods ready, loading it, then sending it. The transport itself may take 1.5 months. Then the goods will reach you, you'll unload it, maybe you will test it. So it may take a considerable time. That is why they have given 6 months. Though I believe now in today's scenario where transport also has facility has grown so well, you have better connectivity roads. So now even the transport is faster. But fine, this is the law made from day one. And as I said, it is copied from the VAT laws. Maybe over a period of time, they may reduce this to 3 months, 4 months, whatever. But as on date, you are right. It is a very lengthy period given, but fine. That is what the law says. So we are continuing.
Yes, sir.
Perfect.
Perfect, sir.
Yes. Anybody else? Any queries? Clear? Okay. Now let us go to similar transaction in services. So how we study time of supply for goods forward charge. Let us now see time of supply for supply of services forward charge. Again, same three categories. I will say regular transactions. Then I will say continuous supply of services. And I will say special. Now here, in case of service, you cannot have any transaction like service sent for approval, because services cannot be coming back. Once given, it is given. So that is not the special case. There is nothing like services on approval. So here, special transaction is cessation of services. Now again, what is the time of supply? It is again earliest of. Now, for this, you study section 13. So like how we are studying section 12 for goods, now for service, we have to study section 13. Now again in section 13, first part is saying, it is saying that the liability to pay tax in case of services shall arise at the time of supply, which is determined below. So again, it is saying by time of supply is artificial concept. It has to be a date which we are fixing. Now again over here, what is the time of supply? So again, subsection 2 of section 13 covers forward charge, because for reverse charge you have a separate section. It says the time of supply shall be earliest of 3 days. Now in fact, this third date is what was there above also, but over there it was not relevant. That is the date of payment. Now first is what it is saying, earliest of 3 dates. The first date is the date of issue of invoice. So it means the actual date of invoice. But this actual date of invoice, when this will be relevant, if the invoice is issued within the time limit of section 31. So first date is actual date. Now what is the second date? Or now here the relevance is of payment. So out of both these dates, whichever is earlier. Again, the B part says, now you will see, or now you will consider the date of providing service. So first you were considering the date of issuing invoice. Now we'll consider the date of providing service. When this will be done, if the invoice is not issued within the time limit. So whatever is the time limit prescribed in section 31, if you are not issuing the invoice within the time limit, then since the invoice is not issued within the time limit, the date of invoice is of no use. Then we will take the date of service. Again, we will compare it with the date of payment. Whichever is earlier will be time of supply. So the two scenarios that are given over here is, in case of regular transaction, you have to check whether invoice is issued within TL is time limit, prescribed in section 31. Now, this is the first thing that you have to test. Now, your answer could be yes, your answer could be no. Yes is what? Invoice is issued within time. No is what? Invoice is not issued within time. Now, in this case, what are the two dates you have to consider? Actual date of invoice and date of receipt of payment. If invoice was not issued within time, so we don't consider it as a valid invoice, so the date of invoice is gone, then we will take the date of provision of service and again compare it with the same date. So two dates, actual date of invoice or the actual date of providing service compared with the date of receiving payment. Now, interestingly, for the first time now we have to even consider the date of receiving payment. Now, the question is what will be taken as the date of receiving payment? That is what is given in explanation, which we ignored in case of goods, because for goods, the date of payment itself was not relevant. So we did not go to the explanation. I had striked out the explanation. But here we'll go to the explanation, which will define what will be the date of receipt of payment. And the explanation says the date of receipt of payment is date payment recorded in books. So I think it is the first date when you are recording the payment in books. Second, date of payment received in bank. What are these two dates? Understand? So you are making me a payment. I'm the supplier, you are the buyer. Now, when you make the payment, definitely I'll pass some entry in my books. So in my cash book, if you recall 11th standard days, you pass an entry. That is the first date. Plus nowadays, people are making payment online. Now let us say you make payment to me online today. But today, because of Raksha Bandhan, the office is closed. Plus tomorrow, Saturday, Sunday, again there is a holiday. So my account person is coming on Monday. So in my bank, because of online payment, the payment is credited today itself. But since the offices are closed, my accountant who is coming on Monday, or maybe the accountant has taken extra holiday, is coming on Wednesday. my accountant is recording it on Wednesday. Now, when I'm saying Wednesday, the month has changed. But the point is, which date will be considered as date of receiving payment out of both these dates, whatever is happening first. So for everything, we are taking the earliest. So now my time of supply will be earliest of actual date of invoice, or the date when entries pass in my books, or the date when amount is received in my bank, whichever is earlier. If invoice was not prepared in time, it was prepared late, then the date on which the service is provided compared with the date when the payment is recorded in my books of accounts, or the date when the payment is received in my bank, whichever is earlier. Is this clear, students? Understood by all?
Yes, sir.
Perfect.
Yes, sir.
Great. So let us have a break. And then after the break, we come back and discuss further. Fine.
Yes.
Okay, sir.
So what does 13.2 says? The time of supply is earliest of following A and B. A is if invoice is issued within time, then you have to compare two dates, date of invoice, date of payment. If invoice is not issued in time, date of providing service and date of receiving payment. Now the question is, what is the timeline? So the timeline, again, as we know, is given in section 31. What does 31 says? A registered person supplying service shall, before or after the provision of the service, but within a prescribed time, issue a tax invoice showing the description, quantity, value, etc. So again, it is using the word prescribed. Now, what is this prescribed time that we get in rules? Now, interesting thing to note here, students, is that when we were studying supply of goods, the law did not say that there is a time limit given to issue the invoice. For goods, the time limit or the date to issue the invoice is immediately on delivery. So section 31, when we read with perspective of supply of goods, section 31 says invoice is to be issued on or before the delivery. But when you come to supply of service, section 31 says invoice has to be issued within the prescribed time. And what is the prescribed time? The prescribed time is 30 days from the date of supply of service. So let us say, as a chartered accountant, because we are covered in this particular category, I am filing your income tax returns. Now is the income tax return season. So when I will file your returns, let us say I have filed your return today, 28th of August. So from today, within 30 days, I should raise invoice on you. So the raising of invoice is within 30 days from the date of supply of service. Now this 30 days has been extended to 45 days, where the supply of service is insurer or a banking company, financial institution, NBFCs. So when these are the suppliers of service, then the invoice which has to be issued shall be issued within 45 days from the date of supply of their service. So whenever a bank has to give you an invoice for bank charges, for loan processing fees, or the insurer has to give you invoice of your insurance premium, they should issue the invoice within 45 days. So the timeline for issuing invoice in case of supply of service is 30 days, whereas in case of goods, there was no such timeline. So you have to understand this, that there is a timeline in case of supply of service, but no timeline in case of supply of goods. So here, whether the invoice has been issued within the time limit prescribed, this is 31.2. And what is the time limit prescribed? It is 30 days or 45 days. So this is the time limit prescribed. Now, basis this time limit, we determine our time of supply. This is as per section 13.2a. This is as per section 13.2b. Correct? And this is as per the explanation given in 13, what will be the date of receiving the payment. Now, 31.2, which gives you the timeline, has given again a proviso. What is a proviso? The government may, on recommendation of council, specify category of services or supplies in respect of which tax invoice shall be issued within such time and in such manner as may be prescribed. So when you will study this topic of invoice, you'll get to know all those details, like in case of transportation of passenger service, like in case of your services where you go to Cineplex for watching a movie. There is some different provisions given. Further, subject to conditions mentioned therein, specify the category of service in respect of which any other document may be issued instead of invoice, and that other document will be deemed to be invoice. So as I was giving you example, when you travel by an AC bus, which is leviable to GST because AC is not exempt, in that case, they are not giving you proper invoice. They are giving you a small slip which is generated from that small machine that they carry, the conductors, right? Similarly, for cinematographic films also, you don't get a proper invoice, you only get that slip type of thing, because these people are given relaxation, and in fact, they are allowed to give any other document also instead of invoice, and that will be deemed to be invoice. For some, even the relaxation is that the invoice may not be issued at all. Like for banks, they are saying that giving bank statement itself is deemed to be compliant. So there are such type of relaxations. Fine. Now coming back to our provision of time of supply. So for forward charge of service, if invoice is issued within time, if invoice is not issued within time. Then comes a third category. Now third category deals with what? It says the time of supply will be the date on which recipient records the receipt of service in the books of accounts. So they are saying that where A, B is not applicable. So neither this nor this is applicable. In such cases, the time of supply will be the date on which the recipient is recording the receipt in their books. So you are supplier of service, you have supplied service, but for some reason, both these are not applicable. But we need a time of supply, obviously, because we need to do the payment. In such cases, it will be the date on which the recipient is recording the receipt. Now you'll ask, sir, what will come in clause C? So clause C will cover those cases where the supplier maybe has not maintained proper books records, or the transactions are in cash where there are no proper entries passed. In such cases, or the supplier is individual who is not having proper organized system, so proper books, proper information is not recorded at the supplier's end. So in such cases, we can take the basis as the entry in the books of the recipient. If above is not applicable, TOS is date of services as recorded in books of recipient. So this is what section 13(2)(c) says. So where A and B is not applicable, you will take the date as the date when the recipient has recorded the receipt of service in their books. So broadly, these are the two provisions for determining time of supply in case of forward charge transaction of services. Correct? Now, the provisos, the explanation which we had skipped in case of supply of goods because they were not relevant over there, are relevant over here. Now, first is this proviso. Now, when this proviso is applicable, whenever advance is received. Now, first important point, students. Now, in case of supply of service, the date of receiving payment is now important, which was not there in case of supply of goods. Now, the relevance of this is that even before the date of invoice or provision of service happens, if the receipt happens earlier. Now, when the receipt will happen earlier? Only in one scenario, when even before giving the service, you have taken advance. So like in case of our professional services, somebody wants opinion. Now, before I give opinion, I ask for giving me advance. In that case, this particular point becomes relevant. Just a minute. Sorry. Yes. So you had a question, Bida. Even if supplier does not maintain books, he will have knowledge of when his service provided and when he received the payment, then no need clause C. See, this is what is the point. You are right in your question. But if the supplier is not maintaining books, he is having knowledge, this is correct. But again, I repeat one thing. See, that is why I took some time at the start to explain you all the ideology. So that when we are reading the provisions, that ideology will help you. See, supplier knows everything, but the person who is coming for checking, so let us say department audit team wants to do the audit, they need proof. See, all these dates, I again repeat one sentence which I had mentioned earlier also. All these dates are those dates which will have some recording reporting. Correct? Now, if there is no recording at the end of supplier, then we are going to clause C. So then at least we'll find some recording done at the end of recipient. So clause C says we will see the date of receipt of service by the recipient. You got the point, beta? Yoginder.
Yes, sir. But while considering while filing GST, how would the supplier will know the recipient date of recording?
Acha. So if that is your question, please understand one thing. See, if you understand the reason of clause C appears to be mainly applicable for the cases where people are not recording. In other words, they are also not themselves paying the tax. So this will be more suitable according to me whenever you are not paying tax and when the department is taking action. Now department wants to decide, okay, now I want to send you show cause notice. So, but what should be the date? The department should consider that, okay, you have provided this service and you have not paid the tax. So see, generally how this will happen, what I can explain you with practical insight, that let us say you have provided services to me. I am a chartered accountant. I am regular in all my return filing. Now you are an individual service provider. You provided some service to me. The value is 25 lakhs. But you did not even take registration for whatever reason, either because of intention to evade tax or because of ignorance. So you did not do anything. Now, department also do not know this, but my audit is happening with the department. In my audit, they find this invoice because for me it is a business expense, so I have reported your invoice. Department finds this that okay, Mr. Yogender has provided this services to Vishal Poddar and Company Chartered Accountants, and the value is exceeding 25 lakhs, but there is no tax invoice. So the audit party will ask me ki, why you are not having tax invoice. I'll say, sir, my supplier did not give me any tax invoice. And anyways, this transaction is under forward charge, so it is his responsibility. Why should I bother? So I have not taken any care of. So the department will say, okay, now they will be sending you notice because you have not taken registration, because your turnover from my transaction itself has exceeded 20 lakhs. So definitely you are liable to pay tax and you have not done that. So now on the basis of this, they will be taking action against you. So now how will they decide in which month they have to ask tax, how they will calculate interest? So that is why clause C will come into the picture, that they will decide it on the basis of the date I have reported ki in this month I received this service from Mr. Yogender. So that will be the basis for determining time of supply in your case. This is how clause C will be practically applied. Understood, beta?
Yes, sir.
So if you are recording everything, beta, then this will not be required. So you are correct. But this clause is applicable when you are not recording and you are not yourself paying the tax. So this is mainly used by the department when they have to initiate an action against you, right? Now Radha is asking again a interesting question, sir. What about composite supply of goods service both? So a very interesting point. Ki, sir, if it is a composite supply, then should I take time of supply of goods or should I take time of supply of service? Correct, Radha? This is your query.
Yeah, I was thinking, would it be taken goods part separately and services portion
Exactly. So
separately?
that is what is your question. So if it is a composite supply, we will take which time of supply, right? Goods or service or
Correct.
both?
Yes, yes.
Yes, Yoginder.
Sir.
What is your answer to this?
Sir, the materiality will show here.
So you mean to say we'll take only one of them, whichever is material.
Yes, sir.
Okay. ठीक है. Yes. Any other answer? The answer is Section 8. What is Section 8? It determines how tax will be levied in case of composite supplies or mixed supplies, where Section 8 says if the transaction is a composite supply, then you will find out which of the supply is principal, and that will be taken as the basis, and that particular supply will decide the taxability. So if this transaction satisfies the definition of composite supply, then out of the multiple components, which one is your principal? If it is of goods, you will take that particular as the basis. So the tax rate will be of goods, exemption will be of goods, and time of supply will be of goods. Similarly, if service is the principal component, then you will take tax rate, exemption, time, everything of service. This is how it will be, Radha. Fine.
Okay, sir. But sir, can it be possible that both are dominant?
Yes, Radha, you are saying something.
Sir, I was saying that okay, I got the point since the supply chapter that okay, whichever is dominant or principal.
No,
But
so
sir,
first, if it is composite, then only you say the principal. If the
correct.
supply does not satisfy the definition of composite, then we'll call it as a mixed supply. And in that case, we'll see which of these supplies has the highest rate. Correct?
Correct.
And
Yes, sir.
then that particular supply, if it is goods, which is having the highest rate, you apply all provisions for goods. If it is service, you'll apply all provisions of service. Now tell me.
No, sir, just a crazy thought came that if both are dominant, like both goods and services
Then
are
it will
equal.
never be called as composite. Now, see, go back to the definition of composite. What it says, where only one of the supply is principal. If you
Hmm.
have two supplies which are equally dominant, then it will not fit in composite, it will become mixed.
Then, sir, what to do? Highest rate only in
Yes,
whichever it
then
is.
you will apply. See, that is why section 8 is very important. Na? So that is why, see the logic of how law is drafted. Law also knew that you will come across this type of question in time of supply. So they have already decided this in the earlier section, which is section 8, right?
Yes,
So if
got
it
it.
is more than one supplies are dominant, then it is not a composite supply, then it becomes mixed as per the definition.
Yes,
Now,
sir.
once it becomes mixed, what is the next step? The next step is you will have to determine out of the mixed supplies, which is having a highest rate. That will be the basis for deciding everything. Correct?
Yes, sir. Clear.
Perfect. Perfect. Now, what is this proviso saying? So the proviso is saying that now, in case of supply of service, now even tax can be levied at the time of advance, as we have seen. Now, since tax can be levied at the time of advance, then comes the question, what if the advance is of a small amount? So let us say you have given me advance of only rupees 200 today. Now the law says, see, we want tax at earliest, but if the amount of advance is very meager, if it is nominal, then we will also not put you in that hassle that, okay, for this small amount, you show this in your returns, pay the payment of tax. So they have given an exception in the form of this proviso, where it says that this amount of advance is up to rupees 1000. In that case, you may not take the date of advance as the time of supply. In that case, the time of supply at the option. So it is now left to you what you want to do, can be now taken as the date of issue of invoice rather than receiving this amount. Now see, they have purposefully used the word excess amount, but what it means is advance. So what is excess? So for which you have not yet billed, if the person is making payment even without you billing it, so it is like advance. So what they have used the term in this whole proviso is the word excess amount, but what they mean by excess is advance, because that is what is amount which is in excess of the amount indicated in tax invoice. So more than tax invoice, if any amount is paid, it is nothing but advance, because I have not yet given you invoice because the service is still pending, but you are giving me the payment which is in excess of the amount in invoice. So this is a different way of saying advance. Now the same proviso was there in the goods section also, but since in the goods section, the date of payment has been kept aside by the notification. Hence for us, that paragraph I had striked out. We did not read the para, but the paragraph is copy paste. So whenever in future, if that particular notification for supply of goods is removed, it means even for supply of goods, the date of payment becomes relevant. Then this same proviso over there will apply, which simply means that for a small advance, which is up to rupees 1000, you may need not pay the tax at the time of advance. You may pay it at the time of invoice. Yes, Radha.
Sir, like at the time of invoice means separately the advance would be showed as a breakup, right? Like it has been paid earlier or
No.
separate
See,
invoice.
see, your invoice, let us say same example of our professional service, right? Because this is the season of income tax. You have come to me for filing your income tax return. I have said that my fees will be 10,000. But I said, boss, I want some advance. So you said, okay, what? Let me do one thing. Let me pay you 1,000 rupees as advance. Now, in this particular case, I have received 1,000 now. Now my service will be completed and then I have 30 days to raise the invoice. So let us say my invoice is dated 29th of September, that is next month. What is the value of invoice? 10,000 rupees. Out of which 1,000 you had paid me in advance in the month of August, and balance you will be paying me after this. Now, what this particular point simply says that I will pay the tax of this 1,000 along with my invoice. So my invoice is of full price, which is 10,000. I will pay the tax of 10,000 at one go. If this proviso would not have been there, then my invoice remains of 10,000, but 1,000 rupees tax I would require to pay when I'm filing the August month return, and balance 9,000 tax I'm required to pay when I'm filing my returns for September month. But to avoid that hassle of paying tax on small advances, this proviso is there. Understood, beta?
Yes, sir. That means there is no need for showing the advance receipt on the September month. Altogether, you can include 10,000 fees.
Exactly. That is what it means. So then, since
Okay.
the time of supply is not triggering, you will have to keep the entries in your books, obviously, because that transaction of receiving 1,000 rupees has happened, but that may not be shown in your returns and no need of paying tax on that.
So invoice doesn't need मतलब invoice में ये दिखाने की जरूरत नहीं है. It need not need to be shown and as a part of advances received, right? So that's what I was asking.
See, understand one thing, beta. What is to be shown in invoice is decided by the invoice rules. Now, invoice rules has laid down 19 different, you can say, parameters which should be appearing in invoice. Maybe you may recall the name of the supplier, registered address, registration number, 16-digit invoice number, date of invoice, HSN, all these parameters are given. In that entire parameter list, nowhere they have mentioned that you have to show the invoice, the advance amount in the invoice. So when I'm preparing invoice next month of 10,000, I need not show that advance, correct? In the invoice.
Okay, sir. That is immaterial in short. Yes.
That is,
Immaterial, sir, in that way
sorry, what?
because it is only up to 1,000. Am I
Yes, that is
audible?
what is their point.
Yes, sir. Okay, okay.
You're audible.
Yes, sir, I got it. Thank you.
Now, there are some explanations. applicable for first two situations. What are they? First explanation, the supply shall be deemed to have been made to the extent it is covered by the invoice or by the payment. Now again, this is an interesting point. What it says that whenever you are raising invoice for part amount or whenever you are receiving part amount as advance, it will be deemed that the supply is made to the extent of this much part amount which you are showing in invoice or which you are showing as payment. So in short, to the extent of payment received, let us say part payment of 2000 is received. So 2000 will be deemed to be the amount of supply. So in simple words, since you have to now make payment of that 2000 rupees because advance is received, so they are saying deemed that that much supply has been made. So to the extent the payment is received, which is part amount, you will deem that the supply is made. Fine.
Yes, sir.
Now
Sir,
comes the
but
explanation. Yeah, tell me.
sir, but filing when we are filing GST, we won't show it as a invoice, right, sir? We will show it as advance only.
Correct. See, what is the purpose of this explanation? This explanation is relevant because otherwise somebody will say, ki, why should I pay tax on advance? So the purpose is the law says deem that to that extent, to the extent of payment received, deem that supply is made. Why this deeming is required? Not because they want you to report it as a supply in your GSTR1. See, GSTR1 reports two things. It reports one is invoice, one is advance payment. Interestingly, if you observe, your GSTR1 has no specific table to show supply. What we show is invoice. So in all the tables in which you are reporting B2B, B2C, export with payment, without payment, SEZ with payment, without payment, in all those tables, what you are reporting is the invoice. And that is what is exactly written here. When you are raising invoice, let us say of part amount, or when you are receiving any advance payment, which is again of part amount, since we are asking you to pay tax on whichever is earlier date, please understand the relevance of this. We are asking you to make payment on whichever is earlier date. You deem that to that extent supply is done. Otherwise, somebody will challenge the whole time of supply saying that there is no liability to pay tax until and unless actual supply has happened. So let us say, see, I'll give you again example of invoice also. So advance payment, we all understand that I'm going to do your, now let us say I have to file your 99C, which is the GST's annual return, which I can do later. But I'm saying, boss, if you want it to be done from me, make payment of fees today. I will file after 2 months, but make payment of fees today. Now you are making payment of fees to me today. The law is asking me to pay tax on this advance. But tomorrow somebody can raise a technical error question in this particular saying that this section itself is wrong. I need not pay the tax because today no supply is done. And technically that person will be right. So to cover up that situation, they are saying that since in time of supply, we are asking you to make payment on whichever is earlier date, and that date may be a date on which or by which actual supply may not have been given. Like I have not yet prepared your returns, I have not yet filed your returns, I have done nothing. But since the law, because of this time of supply, is asking you to discharge that GST today, because today payment is received, or let us say I'm saying, okay, I'm preparing invoice. See, you can always prepare invoice before the service is given. The law is not stopping you from that. So today I want to give you invoice. So I'm giving you invoice today. Maybe I'm not even asking for payment, but I'm saying this is just a confirmation that you have given your work to me. I will raise invoice today. Now, even if I raise invoice today, I have not yet actually done your work. So technically, if you understand, technically there is no supply. So where is the question of GST arising today? But because of this explanation, the law becomes applicable to you today. So even though the actual supply will happen in future, but if either invoice is prepared today or if I have received advance today, then in order that I have to pay tax because the time of supply is requiring me, first we will have to confirm supply. So even though actual supply happens later, but this particular explanation says deem at least to that extent the supply has happened today. This is what is the reason of this. Correct?
Sir, if like it gets the
One
advance
second.
get.
1 second. So is it clear to Yoginder?
Yes, sir.
Perfect. Now what is the logic? Right?
Yes, yes, sir.
Yes. Yes, Radha.
Sir, if the advance gets forfeited, then
That is where again you have that provision. I have asked you to make payment of tax today. Now in tomorrow, no, I think you want to say not forfeited, advance is returned. This is what you want to say?
um, oh yeah, sorry, returned. Yes,
Correct.
if
So
you're
let
not
us say after
yes.
1 month, for some reason we decide that I will not give you this service. You also agree and I also agree. So we say, okay, let me cancel this transaction. So you'll say, okay, no problem. Give me back my money. I said, fine, I will give you back the money. Now, what will happen in this case? So the returns section provides that in that particular case, I will have to create a document showing the rejection of this, right? And on the basis of that document, I will upload the document in the GST portal. And to that extent, I can take reduction in the value of that particular month's payment. And to that extent, I will indirectly get back the GST. Are you getting the point?
Yes, in the month in which it is being returned.
Exactly. So whenever the month we decide to cancel this and I return back your money, in that month, I will upload this document also showing the return of this particular amount to you. And on that basis, I can get my GST of that month reduced. Indirectly, I am getting back this amount of GST which I paid today. Right?
Yes,
Understood, na?
yes, sir.
Perfect. Now coming to the second explanation. What the second explanation says, what will be considered as the date of receiving payment? So the date of receiving payment is two dates. First, the date when you are passing the entry in your books of accounts, or the date when the amount is credited to your bank. So out of both these, whatever happens first, that will be considered as your date of receiving payment. So that is what we have also written over here. We have to take one of the dates as date of receiving payment. But what is the date? It is the date when entry is passed in your books or the date when it is actually received in your bank, which we say credited to your bank. Right? Clear? Perfect, students. Clear?
Yes, sir.
Now, same like goods, for service also, we have two scenarios or rather three scenarios. One is regular supply of service, then second is continuous supply of service, and third is special case, which is cessation. Now, what we just discussed till now from all these provisions collectively is time of supply for regular supply of service. Now we come to time of supply for continuous supply of service. Now, for regular supply of service, what was the time? The time was that you should be issuing invoice within 30 days. Now, what is for continuous supply of service? What does subsection 5 says? Subject to provisions of clause D of subsection 3, in case of continuous supply of service, there are 3 dates given. Now, all these dates, importantly, are not having that 30 days additional window. The 30 days additional window is applicable only in case of the regular supply of service. But whenever there is continuous supply of service, the time limit given for raising invoice is a single date and there is no 30 days cushion given. What is that date? where the due date of payment is ascertainable from the contract, invoice shall be issued on or before this due date. Where the due date of payment is not ascertainable from the contract, in that particular case, invoice should be issued when you actually receive the payment. And where the payment is linked to completion of an event, invoice should be issued on the date of completion of that event. Now what it means. So understand this. We are deciding time of supply. Now for regular supply of services, the time of supply was earliest of two dates, actual date or the receiving date. Now it depended upon whether the invoice was issued in time, and the time limit given for issuing invoice under 31(2), which was only limited to regular supplies, was that extra 30 days window. However, for continuous supply of service, TOS is earliest of. Now here it will be actual date of invoice or due date of invoice or date of payment received. Actual date of invoice, that is the date reported on the invoice. Date of receiving payment is again these two dates, whichever happens earlier. What is different is the due date of invoice. Now for continuous supply of service, there are three possible due dates. One is due date of payment, actual date of payment, and date of completion of event. Now, out of these three, one of the dates is applicable to you, not all three. Now, what it is saying that whenever there is continuous supply of service, read your contract. In your contract, is there any specific due date given that, okay, you should make payment by 5th of every month? If some due date is given, then the due date for raising invoice is the due date given for making payment. But this is if your contract has due date of payment recorded. If your contract do not have any due date for making payment, then it will be the actual date of payment. You have to raise invoice on that date. And last, if your contract says that when you have to make payment, no fixed date is given, but they have said when I complete a particular level of work, which we also called as milestone. So we set milestone that when this much work is done, you will do this. So what is that milestone? The milestone is date of completion of event. Now these are three different possibilities because there are different ways how a continuous supply of service contract is made. Now, let me first again take you to the definition, because from definition we'll first understand what is continuous supply of service, and then on that basis we will understand what are these three dates. So let us go to the definition of continuous supply of service. Now we saw one definition for continuous supply of goods. The definition for continuous supply of service is on similar lines with small difference. Now, what is the definition? So what is continuous supply of service? So it is the service which is provided or agreed to be provided continuously or on recurrent basis, again under a contract. So this is same like supply of goods. So where I'm providing service continuously on recurrent basis and we have agreed for it. Now you'll say, sir, what is the example? There are multiple examples. First best example is what is going on presently, that is our coaching. Second, you are having an internet connection. You are having a mobile connection. You have installed some dish TV whereby you are getting this services of viewing different channels. All these services are satisfying this first part of the definition. I am not saying they are continuous service. Why? Because there is another leg in this. But the first part is satisfied that the service is provided continuously. So continuously you are having the internet connection flowing. Continuously you are having the mobile connection going on. So the services are provided continuously or on recurring basis. And obviously there is a contract which may again be oral written. Generally all these service contracts are written. Now, what is important, which was not there in continuous supply of goods definition, is the requirement that we will call it as continuous supply only when the service continues for a minimum period of 3 months. So if my batch is for a period of more than 3 months, then only this coaching service will fit or satisfy the definition of continuous supply of service. If my batch duration is less than 3 months, we will fall in regular supply of service. Similarly, if this internet, if this mobile connection is anyways limited for a period less than 3 months, it will not be a continuous supply of service. And then comes the next part, which says that there is some periodic payment obligation. Same like goods. So periodic payment obligation, same like goods, where we have decided that periodically you will make me payment. Now the only difference is that in case of continuous supply of service, how this periodicity is decided, it may be a fixed date, like as I said, even in case of goods, every Saturday. So here it is every 5th of the next month. Happens in case of your mobile bills, or it happens in case of your postpaid internet bills. There is a fixed date of payment. Or like how it happens in case of construction contracts. See, if you are booking a flat in an ongoing, a project, the payment terms are not decided by a date. The builder will not say that on this date of every month you come and make me this much payment. No. What the builder does is it puts a milestone. So if you go through the contracts wherever construction services are involved, which is obviously extended for a long period of time, sometimes 1 year, 2 years, 3 years, whatever. In that case, how does the builder puts the payment terms? So the builder puts milestone. What is milestone? He will say, when I will complete the plinth, you have to pay 10%. When I complete the first slab, you have to pay 15%. When I complete the second slab, you have to pay further 10. When I complete third, further 10, and so on. So he links the payment with completion of an event. What is that event? The work, plinth, first slab, second slab, and so on. So this is where the whole concept of periodic payment obligation comes in. So it may be milestone based, which is over there. What we just saw is the date of completion of an event. And then further it says it includes again supply of service, which the government may notify. So government can on its basis artificially decide that these services should be treated as time of supply. So continuous supply. So those will be treated as continuous supply of service. But otherwise, two things have to be satisfied. One, service is given periodically. Two, the minimum duration is 3 months. And there is a periodic payment obligation. If all these conditions are satisfied, then your service contract is a continuous supply of service contract, where the time of supply is decided like this: date of invoice, date of payment, this is standard, and then earliest of one of these dates. Now, not all three will apply. Only one of the situations will happen. Either a fixed date is given in your contract, or it is linked to some milestone. And if nothing of this is there, then the actual date of payment. So earliest of these will be your time of supply in case of continuous supply of service under forward charge. Now coming to the third category, cessation of service. What is cessation of service? See, this is not a different type of service, but this is a situation that may arise in some cases. What is the situation? So let us say you are an actor, you have signed a movie, but you come across such news that there is some conflict between the producer and the actor, or the director and the actor, or between co-actors, because of which some of the actors, they decide to drop out of that movie. This is what is cessation of service. So where the service was agreed to be provided, like completion of the movie or recording a particular song, etc. But after starting the service has been stopped. Stopping is what is cessation. So we had agreed that you will complete the movie, you will complete the web series, whatever. But for some reason, maybe avoidable, unavoidable, for a reason of some conflict, we decide to end our contract in between. That is what is cessation. Now, if the contract is ended in between, the law says we have nothing to do with that. That is your headache. We want our tax. But now there are two questions. First, tax on what amount? And second, when. So that is where the when is answered over here. It is saying when you have raised the actual invoice or when you have received the payment. And the third date is the due date of raising invoice. Now, what does section 31 says for the due date? Section 31 says it is the date of cessation. And interestingly, section 31 also indirectly answers on what value. So it is also saying to the extent of services provided. So what should be the value for which you should raise the invoice? It is the extent to which the service is provided. So see, in case where supply of service ceases before its completion. So the movie is not yet over. We had originally contracted to complete the movie, to complete a web series, or in our case of CAs, I had undertaken to complete your audit for the whole year. But after first 3 months, because I'm getting a lot of interference from your directors, I'm getting undue pressure from outside. So it is hampering my independence, and I'm not able to do my professional service in an unbiased manner. So I decide to quit. I decide to forego the contract and to stop this particular work. But till then, I have already done 3 months of work. So no problem. In such cases where the supply of service has ceased, ended, before its completion, the invoice shall be issued at the time when the supply ceases. So what is the due date for raising invoice? It is the date of cessation. Further, it says such invoice shall be issued of what amount? To the extent of supply made before such cessation. So to that extent, whatever, like in my example, if I've done 3 months of audit, I will be raising invoice proportionately for 3 months. In case of movies and web series, many times this is very difficult to decide, because if you are doing it partly and leaving it, technically from the side of the producer, they have to now maybe reshoot everything, because they cannot keep you in part of the movie, and part of the movie they'll take someone else. So if in all those challenges, maybe this extent of supply itself is zero, then the question ends. But in all other cases, like in case of our audit service or any other service where to that extent the supply is done, like let us say you had asked me to do construction, and in midway I decide to not continue the construction, I decide to get out of this contract. But till that date, whatever construction is done, this provision applies. So this is how cessation of service, time of supply will be determined. So, continuous supply of service, how did we determine what is the due date of invoice? Determined by 31/5. In case of cessation of service, how did we determine by when the invoice should be raised? It is determined by 31/6. And the date is date when you stop the work. And what amount? To the extent you have completed the work. Now, time of supply is the earliest of the 3 dates. Is this clear, students? Have you all understood this?
Yes, sir.
Sir, may I ask one thing?
Yeah, please, beta, go ahead.
Sir, you took the example of the web series or movies, right? So I was thinking that since the directors need to reshoot everything, then what is the purpose of the prior parties which were there, like prior actors? That was my query. Like they will be done the payment on the settlement of whatever is being done, right, till date. But then what
So
about
that's why I'm
the?
saying, I already told you, beta, in such cases, we may have to decide ki what will be extent. Rather, the producer will say, forget about I paying you something, now I'll have to recover from you something because I'll have to reshoot the movie again.
Okay. So, yeah, that is okay.
So then that becomes a disputed matter. Na? So then that is decided either amicably between you both or it goes to the court, whatever. But in all other cases, like in case of our audit service or construction service, if I decide to stop in between, what will happen? I have done some work, so I will raise invoice up to that level because I have done 3 months of audit. You have done some extent of construction. To that extent, you always raise the invoice, correct?
Yes.
But
Yes, sir.
many times, beta, cessation is the disputed case because when somebody is stopping the work in between, obviously there is some dispute at one of the ends. This will never be done amicably. That is very rare when cessation of work happens amicably, right?
Yes, sir. So who will be the dominant party over here?
So that is where it depends upon how well you all are discussing and solving it mutually. If not, then the court decides.
Okay, got it. So as per the court order, it will be decided, and that would be the GST
Amount.
liability will be determined by that.
Correct.
Okay, sir. Yes, sir. Got it.
Perfect.
Yes, sir.
So today we completed time of supply, goods forward charge, all 3 types of transactions, service forward charge, all 3 types of transactions. And while doing this, we studied 2 sections parallelly. One is the main section, which is time of supply, which is 12 for goods, 13 for service, and parallelly section 31, which decides what is the due date by which the invoice should be raised. So that due date is also determined here, and it is determined under varied provisions of the GST law. Plus, besides this, we saw some exceptions. One, in case of goods, the date of payment, this provision, though appearing in the law in the form of clause B, has to be right for the time being ignored because of this notification. And then we saw that in case of service where date of payment is applicable, however, if the advance is up to 1,000, you may ignore it. You may not pay the tax on that advance, which is up to 1,000 because of the specific relaxation given in the provision. So with this, we conclude the first, and I should say the major part of time of supply. Now, in the next lecture, we will go to the remaining aspects of time of supply, and we will take up some practical scenarios. So thank you very much for the day, and let us meet again in the next class. Good day, everyone.
Good day, sir.
Good
And
day.
sir, just one thing I wanted to know the tricks for remembering all the exemptions, sir. It is very vast, sir. How to do that?
See, frankly speaking, beta, there is no trick. It is
Okay.
only by repetition. It is only by, you can say, making it a fixed schedule that every week once at least, maybe not all exemptions, but the important ones you will run through. So if you do it periodically, maybe not every week, but at least every 2 weeks once. So I'm sure you will be able to retain it much better.
Yes, sir, sure. And sir, one last request. Like, can you upload the the PDF over the portal one day prior to the class, if it is
So, beta, I
possible.
have been doing that, na? I
Yeah,
have been
at
doing
that.
that.
No, today's class notes weren't uploaded,
No,
right?
today's class, anyways, I am not using my notes because this was
Okay.
very much theoretical. As you can see, we have to only look at the sections. So if you want, I can take all the sections and upload it. That is fine. But there was nothing. See, today's class did not have anything outside the sections. Everything we
Yes.
have been discussing is purely section based. There is nothing extra like circular or anything. So that is why I did not think of having any separate notes given for this. But
Sure,
for
sir.
all other things, I've given it a day prior, right?
Yes, sir. Yes.
Perfect.
Okay, sir. Thank you,
Anyways,
sir.
but still, what I will tell you is, see, my
Hmm.
notes are nothing very much different outside what the module is. So what you can do is, anyways, you know the schedule, what is happening on which date. You can just run through the module a day prior and come. Na?
Yes, sir.
Yeah. So
Definitely.
even that may not be a challenge for you. Fine.
Yes, sir. Okay, sir.
Yes.
Bye, sir.
Okay. Good day.
Good day, sir.
Okay, G. Good day. Thank you to you.
Good day, sir.
Good day. Yeah, yeah. Please. Thank you.